Dale and he's from BlackBull Markets. Now behind me is the chart of gold, the biggest mover in the markets, and of course this follows a massive rally in the commodity sector across the board. Gold, silver, lumber futures, which has been in the news a lot. Oil, of course, also rallying. Now this is all off the back of that persistent weaker dollar that we've seen throughout the last few months. Of course, it's accelerated by the Fed, who are continuing their asset purchasing scheme until they see substantial improvement in the economy for the US. Now, unlike other central banks who are looking at tapering bond buying as well as increasing interest rates in the coming year, the Federal Reserve have taken another approach and still been pretty dovish. Now, this has really been that driving factor in gold as well as equities. Of course, a lot of stimulus still going into the equity markets, which are reaching new highs, and gold was somewhat lagging until yesterday. Now, yesterday was monumental because we broke above 1800 again, and we're currently trading firmly above 1800 throughout the trading session heading into the European Open. And of course this is all building up to the NFP data print. Now if the recent week is anything to go by, we could continue to see more upside in gold as the markets shrug off jobs data that we saw, of course, with jobless claims coming out at those 6-month highs. Gold rallied. And of course on the daily time frame we have a lot of technical indicators to support a move potentially above 1830. Now if we see a bit of analysis here, you had this support form a double bottom around the 1671, really affirming a move higher to the upside, and we saw that. And then over the last few weeks we've seen a lot of consolidation around that $1770 mark, which also formed another key support going back to November 2020, February 21, and throughout the whole of April pretty much. 1770 where prices were muted, equities were rallying, and investors were expecting that breakout in gold. It finally happened. We've been talking about this in our videos, and we have spoken about the possibility of course, firstly the break of that trend indicating a move to the upside. Now a push above 1770, a close above that key level of $1,800 an ounce, putting sights of 1830, 1876 well in play for the next coming weeks, perhaps, as gold looks to retrace a lot of those losses it's had since the beginning of the year to, of course, catch up with other commodity markets and play to the market dynamics of that weakening dollar. And of course, with NFP around the corner, we could see another leg up. Do be cautious, however, because we could, as well as it long-term bias or medium-term bias to the upside, potential room for reversals with the data prints, as we saw yesterday with the pound especially. There was a lot of swings from hitting our take profits and then swinging lower to take out, pretty much reverse the entire move, and that has been the tone of the markets with these news releases as well. You do see big reversals of those gains, but the overall trend does seem to be playing in our favor. So do keep an eye on the gold chart. It's definitely one that we're watching today, as the US are expected to release probably a very sound jobs print. As we saw 1 million jobs created in the previous month, we could well see a similar figure this month as well. So do trade consciously, trade with a stop loss, of course. If you haven't been over the last day or so, you may have been burnt because markets have been pretty volatile. So you either want to be staying out of the markets or you want to be trading diligently with tight stop losses, set risk management, use your economic calendar to guide you through the trading day, and trade safe.